Hi, so we're in the heart of earnings season, and a lot of companies are revealing what happened in Q2 pretty much every day. So my plan is to give you an update on Microsoft, Skyworks, and Tesla. There's a lot of interesting stuff happening here with these companies, so let's just get straight into the video. And if you're new to my channel, well, welcome. My videos are about investments that anyone in the world can make. There's lots of different investments in the world, but I think the stock market is one of the best places to invest. But so many people invest into the stock market because their uncle told them they should, or they watched The Wolf of Wall Street. So my goal is to help as many people as possible actually understand what it is they're buying when they're investing in the share market. Now, there's always going to be the stories out there where you heard of some person buying Tesla for $500 and a month later selling it for $1,500. And it all sounds very exciting, right? But I'm here to give you the harsh reality of the situation because approximately 90% of all investors, well, they actually lose money. That's incredible. So every year there are new people who start their investing journey thinking it's their way to newfound riches. But what actually happens is they end up losing money. So be honest with yourself. If you're not truly passionate about learning how to invest in the stock market and what's actually happening here, well, you really should be investing in probably something like the index funds. What I mean by the index funds are the Vanguard and BlackRock S&P 500 index funds that track the market's overall performance. You're probably going to get around 8% per year, and that will compound over your life. So that situation, well, that's far better than the 90% of people who are losing money, and it's also far better than the interest rates given by pretty much any bank. Okay, now with all of that out of the way, let's go see what's been happening with Microsoft. So here are some of the numbers that Microsoft reported. Revenue was up to $36.9 billion, and the analysts thought it was going to come in at 35.7. Net income came in at $11.6 billion, and the earnings per share was $1.51 per share. Now, the analysts thought it was going to be $1.32 per share, so a good beat here. Now, if we compare these numbers to last year's Q2 results, well, the revenue last year was $32.5 billion, net income of $8.4 billion, and earnings per share of $1.08 per share. As you can see, the numbers are significantly better this time around. Okay, not only did Microsoft easily beat what the analysts were predicting, well, they crushed their Q2 2019 results as well. So overall, Microsoft had a great quarter considering the strange market conditions we're in. Now, the CEO had this to say: "We are innovating across every layer of our differentiated technology stack and leading in key secular areas that are critical to our customers' success." Now, regarding each product segment, we had Azure up 62%, Surface was up 6%, LinkedIn up 24%, Windows Commercial up 25%, but gaming was down 21%. So Azure Cloud Computing seems to be flying along, but it is actually a little bit deceiving because if we go back to the 2017 numbers, you'll actually see that it was growing at around about 90% this segment, whereas this quarter came in reported at around about 60%. Now, of course, this makes sense because as something gets bigger, well, it's expected that the growth is going to decline just because of its size. So I don't actually think it's that much of a concern that Azure is declining in its growth rate because 62%, well, it's still epic. So it'll be interesting to see whether AWS, which is the leading in cloud computing from Amazon, when they report their earnings, to see whether that's slowing down its growth as well. If it is, well, maybe Azure is picking up market share. So for those of you out there who are investors in Microsoft, I would be looking at Amazon's report as well for an indication on how Azure is actually performing. Okay, now what I found surprising out of this report was that Microsoft Office is actually growing really well. So both in the commercial world and the consumer world, Microsoft 365 subscription services are actually working. So the commercial sector is up 16% and the consumer sector is actually up 19% year on year. Now, if you watched my video and when I analyzed Microsoft, my feeling was that the Office consumer subscriptions was maybe going to not be so strong and it's probably going to decline because there were so many good free options out there. But Microsoft is clearly making the subscription model work and it is working very well so far. Now, other areas of Microsoft that also grew were LinkedIn and Surface. Now, gaming was down 21% though. This might surprise a lot of people. With the lockdown, I think a lot of people were expecting to see gaming up in a big way. But after digging a little bit deeper, I saw that the results from last year, they were exceptional in gaming, so it was going to be hard for Microsoft to beat that. See, Microsoft made a lot of money last year with Fortnite and Red Dead Redemption 2 for Xbox. Now, as the popularity of these blockbuster games started to decline, well, the revenue for the gaming side, it declined as well. And look, I'm not a gamer. I have no idea if Xbox is even a good device. But I do know that Microsoft is planning a new gaming console, like an upgrade to Xbox, and they're also going to go to a gamers streaming service as well. But I'll be honest, this is a little bit outside my area of expertise, so I'm not sure what's going to happen with those new products. But this actually appears to be more of a long-term play for Microsoft, which I don't think is a bad thing at all. Okay, now let me give you my final thoughts on Microsoft's results, and I'll sum it up in one word, and that is impressive. If I was an investor in Microsoft, well, I wouldn't be concerned at all. So for those of you out there, you can just sit back and relax knowing that everything is going very well. But in saying that, there is no need for me to be going out and buying Microsoft shares anytime soon, with the current share price of around $203. See, I just don't think I'm getting much value here. Even though these results are really strong and the performance of Microsoft has been really good, I just think it's already factored into the price. Therefore, they really need to just keep crushing their results in the future to warrant that high share price. And for me, I'm going to much prefer to find some beaten down, neglected companies to invest in. All right, now speaking of companies that I have invested in, let's go take a look at Skyworks. Okay, so here are some of the numbers that Skyworks reported. They had revenue of $766 million, and that's down 5.5% from this time last year. Earnings per share came in at $1.25 per share, and the analysts thought it was going to be $1.13 per share, so a nice beat here. Now, the revenue, falling on last year, can be attributed to the sanctions on Huawei in the USA. If you take out the Huawei revenue from last year, well, Skyworks has actually grown by 3% year on year. So diversification moving forward is going to be really key for Skyworks because some of their clients, well, they can have some strange things happen to them. So my opinion of the earnings report from Skyworks is actually that it was really solid. They are having a very tricky year with a lot of manufacturers in China having to shut down for periods of time, but the business, the core business, well, it's performing really well and they are the future of 5G. And Skyworks was still able to roll out some very key projects with some of their key clients. There were launches of new phones from Samsung, Oppo, and some other phone makers which all have Skyworks components in them. And 60% of all phones that were sold in the quarter, well, they have 5G capabilities, and a lot of these 5G capabilities are Skyworks components. They are diversifying because they're working with security systems for both Amazon and Google, plus they've expanded into cars with clients such as Volkswagen, Hyundai, and Nissan. Cars are going to have state-of-the-art tech, and they need Skyworks to help them. But what I like about Skyworks is what they're doing for the shareholders. Firstly, they continue to have zero debt. Next, they repurchased 670,000 shares, which totaled $59 million. So that is one great way to return value to shareholders. Normally, the best way is to reduce their debt, but because they have no debt, the thing to do here is to do share buybacks and dividends. So they also increased the dividend. It's up 14% to 50 cents per share. Now, the dividend is really small, so I'm glad they're not pouring money into dividends, and I'm far happier to see share buybacks. Now, the CEO had this to say: looking forward, our sustained investment in systems-level solutions, together with our strong balance sheet and cash generation abilities, differentiate Skyworks as both a leading technology innovator and consistent provider of cash returns to stockholders. So if you're a Skyworks shareholder, well, the future looks very bright and you can sit back comfortably. Now, based on these results, I have a new price target for Skyworks of $190 where I think it is at fair value. So with the current share price of $135, well, I still think there is plenty of upside still to go. But I won't be buying any more because some of the other investments that I'm looking at have far greater upside than even this. So if you are interested, go back and have a look at my stock portfolio update video to see what I mean. So a good solid earnings report from a good solid company with a bright future. And yes, I do think Skyworks is still underrated. It's just not as underrated as it once was. Unfortunately, people are catching on to this one. And when the share price was back at $70 back in March this year, well, that seems like a long time ago now. Now, these quarterly updates that I'm doing, I'm going to be doing them every 3 months or so. So make sure you subscribe to my channel so you don't miss any of these updates in the companies that you've invested in or are looking to invest in. And finally today, let's go take a look at Tesla's earnings report. So here are some of the results that I thought were important to show you for Tesla. The earnings per share is 50 cents per share, and last year it was actually negative $2.31. And the gross margins are 18.7%, and that's up from 17.2% last year. Firstly, let me just point out that it is definitely good news that Tesla was profitable, even though it was because of an emissions tax credits rather than actual normal profit. But hey, profit is profit. They're also having troubles with their factory, which wasn't operating for about half of the quarter, so that was making things quite inefficient. So moving forward, that was more of a one-off event, and I don't think it's going to repeat itself. Okay, so it's early August and the share price is about $1,500. Now, I don't have a good reason for this valuation. I really can't explain it. It's probably just the most overhyped stock that I have nearly ever seen. Look, I get it that electric cars are the future, but let me paint a very optimistic picture of what could happen in the future, and then you can tell me whether the share price is still overhyped. Alright, so let's say electric vehicles will be about 35% of all cars in the world by 2030. Now that is far above the general consensus of 25%. Let's also say Tesla can keep its market share of 15%. Which would be incredible considering the competitive nature of the car maker space. Now let's also say they can get their margins up to say 20%, which would be very impressive. If they are going to expand into different styles and different regions, 20% would be good. So with all of these things happening very smoothly, in 2030, let's expect $150 earnings per share. Because right now they're looking at about $7 earnings per share for 2020. That's a big improvement. And if I was to then use a discount rate of say 8.5%, which gives absolutely no margin of safety whatsoever, well, we would get a fair value today of $1,250. But remember, I made a lot of very optimistic assumptions there. And the stock price at $1,500, well, it is far above even my optimistic approach to trying to work out some sort of fair value for Tesla. Now, although it is definitely overvalued, I think trying to predict what's going to happen in the short term in terms of the stock price, well, I think that's stupid. See, the thing is, hype can actually keep a company overvalued for a long period of time. Look, maybe the company stays overvalued and overhyped for many more years, or maybe the stock comes crashing down because the hype kind of starts to disappear. Either way, I'm avoiding this completely because at some point, intrinsic value will matter. And I'm not here to make a quick buck in trying to short the stock either. If I wanted to do something like that, well, I might as well go to the casino. If you value your money, well, you really should value your investments as well. So let me wrap all of this up. So Microsoft had fantastic Q2 results. It's justifying their high price, but it's not a bargain. Skyworks had solid results also. They have a lot more room to grow and are doing everything right. Not a bargain either, but still some good upside potential. Now Tesla, well, it was profitable, but it is crazy overvalued. People, I bet, will say you can't value Tesla based on old school valuation metrics. And to those people, well, how about you do your thing and I'll do my thing. Look, I'm really glad there are people out there who value things differently. That's how I can find a bargain. So I've got Amazon, Apple, Google, and Facebook updates coming for you very soon. So please make sure you subscribe to my channel so you don't miss that video. And I hope you like getting an update from Microsoft, Skyworks, and Tesla today. And if you've stayed right to the end of this video, well, firstly, I appreciate that a lot. And write me a comment if you are still here, because I will answer any of your questions. Again, I hope you like this, and I will see you in the next video.